Lemon Tree Hotels posted better than expected results in the September 22 quarter. Unlike other hotel companies which reported a margin drop on a QoQ basis, Lemon Tree broadly maintained its margins performance. With the second half being a seasonally strong quarter, we expect to see further uptick in demand. Strong gains in room rates and favorable demand-supply dynamics would further strengthen the pricing scenario. Room inventory addition is strong, with Lemon Tree's plans to add about 30% more rooms by FY25. Debt-to-equity ratio has stabilized at 2x levels, and Lemon Tree indicated that the expansion would be asset-light going forward. All future capex would be through internal accruals. Improved profitability would result in further strengthening of the balance sheet. Lemon Tree, according to us, is among the few reputed players listed in the mid-market hotel space segment and a quality stock to play the upcycle in the hotel industry. Current valuations are lower than historical trading range and hence look attractive. And therefore, we advise investors to add the stock to their portfolio. Lemon Tree's revenue was up 29% compared to pre-COVID quarter of Q2 FY20. While occupancies were lower at 66%, the gross room rates increased to 4,917 rupees, a 19% growth compared to Q2 of FY20. Margins improved 1,570 basis points versus Q2 FY20, and on a QoQ basis, Lemon Tree was able to broadly maintain its margins. Lower cost structure led to significant margin improvement compared to pre-COVID levels. Lemon Tree's net profit stood at 17 crore rupees, which is the second consecutive quarter of profitability post the pandemic. Retail demand has picked up quite sharply. Corporate momentum is also picking up as business events are resuming. The company has indicated that the second half is normally about 115 to 130% of the demand witnessed in the first half of the year. So in Q3 FY23, the demand is as per expectations, indicating a seasonally strong second half of this fiscal. Also, the hosting of G20 Summit by India in 2023 is expected to boost demand for the industry in Q4 of FY23, which would be an additional growth lever. In view of the strong demand, Lemon Tree is expanding its room inventory. It has a pipeline of close to 2,600 rooms to be added over the next 1 to 2 years. Bulk of the room addition would be via managed hotels format, while the rest would be owned or leased format. The share of rooms under management contract would increase from 39% to 47%, indicating an asset-light approach. While other hotel companies reported a margin compression on a sequential basis in the second quarter of FY23, Lemon Tree sustained its operating margins quite successfully. Its margins improved by about 1,600 bips compared to Q2 FY20, which is the pre-COVID level, and the company stated that the cost reduction has been permanent in nature. As revenues grow in the second half of this fiscal owing to seasonality-related tailwinds and the company realizes higher pricing, margin improvement is expected to very much sustain. Moreover, it indicated that Keys portfolio of hotels, which it acquired just before the pandemic, is currently witnessing lower occupancy as the demand improvement is lagging in most markets that it's present in. Also, Lemon Tree is spending on renovation on Keys hotels and would attempt to increase the pricing of these hotels going forward. Higher occupancy and better pricing should therefore improve profitability of Keys hotels, aiding to the overall profitability. Lemon Tree has guided for EBITDA margin of 50% in FY23 compared to about 48% witnessed in the first half of this fiscal. The company expects demand to grow by 11 to 12% over the next few years. On the other hand, the supply is expected to lag. A lot of players, if you remember, had witnessed financial distress during times of COVID and were unable to expand their capacity. Now, Lemon Tree expects the supply to grow at a much slower rate of 3.5% to 5% over the next few years. So, demand outstripping supply would lead to increased pricing of the available rooms, and that would be beneficial for the industry. Given the better than expected Q2 performance, we have raised our earnings estimates as well for Lemon Tree. At the current market price, the stock is trading at an EV to EBITDA of 19 times its FY24 projected earnings, which looks attractive.